Good afternoon, ladies and gentlemen. I'm George Grisham. I'm talking with you about insurance. This is position number 1.4, which means that we're still at the, let's say, general theory stage. There all will be 1 point something. But please believe me, you have to know this theory much better than practice sometimes, because theory in insurance is the most important thing. When you know your basics, you're always able to navigate in the treacherous waters of insurance. So what is actually covered under an insurance policy? Any insurance policy: property, car, plant, liability, product liability, third-party liability, computer crime, or say personal accident. You have 5 positions, all related to one person, insured: a legal person or a physical person. So when you look at this particular map of insurance, you can see that position number 1 is the object of insurance. And we remember that the object of insurance is immaterial. These are not bricks, these are not wheels, this is legal interest, insurable interest, the legal connection between the insured and the subject matter insured. The subject matter is already a physical thing, again, a plant, a steam engine, an aircraft, or it could be legal liability, or it could be financial expenses. Anyway, we have to find the connection between the insured and the subject matter insured, and this connection is called the object of insurance, i.e. insurable interest. Then we start thinking, what do we want to cover the subject against? There are different risks, but first we have to decide upon the type of insurance, or class of insurance, if you like. And we have property insurances, liability insurances, health insurance, and so forth. So let's say that we are talking about property insurance. We've settled upon type. Now we have lots of perils or risks outside of our subject matter insured. And we actually have to have them listed, or to agree that our policy will be an all risks policy with some exclusions. So we're talking about what we're insuring against, number 1, risks or perils. But then, yes, we probably have done the insurance contract on the basis of all risks, but the insurance contract itself, the policy itself, may be slightly more narrow. For instance, it may exclude some particular risks. Yes, there are lists of exclusions. Then it would have some financial limits, sums insured, for instance, some deductibles. So not all risks, even which are more physically included in the policy, would become losses insured. No, there is quite a distance between a risk, a peril, and a loss insured. So these 5 positions, we want to have them insured. Let's try to look at a particular example. Let's say that we have a ship which is carrying quite dangerous cargo in barrels, some chemicals. And of course, this cargo is owned by a person. At this particular point of the sea voyage, cargo may be owned by the shipper, by some intermediary, a seller, and then finally by the receiver. So we have A, the insured. B, he actually owns the cargo, and this is the insurable interest, what we call the object of insurance. Subject matter insured is cargo itself. And we have decided that we are only speaking about property insurance, not third-party liability insurance, not personal accident insurance, only property insurance. So that's position number 3, type of insurance. Then cargo may be insured only against sinking of a vessel, or total loss of a vessel, or against different risks and perils. Usually cargo is insured on the basis of so-called insured cargo clauses, and if we choose insured cargo clauses A, they are called all risks insurances. So the risks, the perils there are not listed in the policy, but there are lots of exclusions, okay? And one of the exclusions is actually inherent vice of cargo. Further on, we have different exclusions from the policy, we have different limitations. So whether a particular loss relating to our cargo will be covered under our policy or not is a huge question. So let's assume that the cargo was, say, it ignited and burst. Okay? And let's assume that our policy actually covers this particular event. Well, not always, but sometimes it will cover. Let's assume this. So what type of losses we have which actually took place? First of all, under losses, we mean expenses, liabilities, damages. So loss number one, value of the cargo. CIF value or CIF plus 10% value. That's number one. Loss number two, if there are any remains of the barrels in which cargo was carried, and well, when the vessel arrives at the port of discharge, let's say Novorossiysk, these remains of the barrels will have to be discharged. We call them debris. We call these expenses, these additional expenses, we call them debris removal. Debris removal. So that's position number two. Position number three, actually, the explosion was so big that the vessel deviated and actually hit the embankment or hit some shallow place in Bosphorus. There are quite a few of them, and the vessel had to be refloated. Yes, she was kept more or less seaworthy, but I don't know, probably the cargo, the chief mate got afraid of the explosion and sort of, you know, the helmsman pulled in the wrong direction. Anyway, we're talking about refloating the vessel. That's called general average. These are expenses. The ship owner employs a salvage tug, and salvage tug later on in 1 or 2 years would charge the ship owner, and the ship owner, because this was the saving, the procedure of saving both of the cargo and of the vessel, well, this is general average. These are expenses. As regards cargo interests, the cargo owner, for him, it is third-party liability. He is liable to ship owner or the carrier for these expenses. So this position number three. Then there were some other cargoes around, and the explosion got them damaged or they got total loss. So what are we talking about? That's another part of expenses related to this particular accident, but this is third-party liability. This is liability towards the owners of other cargoes on board. Yes. And what will be the fifth? What will be the, I've actually forgotten what I've written myself, but the number five will be actual damage to the ship itself. One thing are expenses related to refloating of the vessel, and another thing is the damage to the vessel itself. So the damage to the vessel is not general average. The owner of that particular cargo is responsible, is liable for the damage to the vessel. So what do we have here? We have 5 positions in a particular accident. Cargo insurance, which is property insurance, will cover 2 property expenses, i.e. cost of cargo, value of the cargo, and expenses related to discharging debris of the barrels. And then cargo insurance will insure a type of third-party liability. Questionable. Shall we call it third-party liability or not? This is general average, when the ship owner's expenses are spread between different parts of marine adventure. Liability it is, or property insurance, well, it is questionable. But then position number 4 and 5, liability towards other cargo owners and liability for the damage of the ship towards the ship owner or ship manager, they're actually third parties liabilities. These two positions will not be covered under normal cargo insurance policy. So we've got here a situation when a cargo insured, well, the owner of the cargo wanted to protect himself against all types of insurances, all types of insurance policies, but only 3 positions were insured while 2 others not. So thanks very much. Now you understand this particular chain of 5 positions which we have in any insured loss, and you understand how we have to prove what exactly was where. Thanks a lot. We'll continue very soon. Bye.